Let's talk silver, the laggard, with Bob Coleman, who has a physical metal business. I've done business with Bob. He was efficient, and delivering the metal. So, Bob, welcome back. How are you?
Sure. Good. How you doing, Dale?
Good. What do you see? Any features happening in the physical markets? I know what price is doing, but under the surface, last time we talked. There was kind of a dearth of activity in the physical silver market. Has it picked up with this recent rally like it usually
Um,
does?
yeah, oddly, retail investors haven't really been engaging. I mean, there's probably been activity picking up a little bit with price action, but if you talk to retail dealers, wholesalers, they're still sitting on a glut of inventory, and premiums have been pretty soft, big time, especially on the bid side. This is very let's say the word, but it's very obvious when you look at some of these big online retail dealers that promote their bids online, and you see that they're paying $1.20 to $1.50 under spot for a 100-ounce silver bar that they were selling maybe for $6 over spot a year and a half ago. I'm just a huge turnaround in the business model, and profitability, and just you're seeing that two-way action just continue on every rally. You're seeing people that have been in this market for 15, 20 years say, listen, I need some income. I'm watching the stock market go to all-time
Right.
highs, and
Yeah.
silver's gone absolutely nowhere. I mean, which oddly for technical analysts out there, and guys like contrarians like me that look at this stuff, they're like, my God, this is brewing potentially a massive base that is growing this wall of worry. That it's never really been about the retail investor that's going to drive the price of silver. Unlike the silver squeeze and the way the retail dealers promoted that, and go out and buy a silver round, and we're going to take the silver market by storm. I think what you're seeing here is it, that the continued demand out of China and India. It's just a massive amount of buying, especially India. I mean, they bought more metal in the first 2 months of this year than I think than all of the U.S. did all of last year. Just a
Yeah,
huge,
copper too. It's their infrastructure rebuild
yeah,
and electrification, right?
yeah. I think that, and also I believe India opened up the a silver exchange, and one of the reasons why there've been a lot of buying of silver in India is they lowered the tariff, or the
Tax.
import tax, yeah, two
Okay.
percentage points for non-bank entities that are private investors that are, I think that they're building out this exchange for. So they had an advantage over the banks, and so they imported a lot more silver, especially from the UAE. And that was a deal that was done back in 2022. So, or either that or late, I think 2023. But it was a deal that actually was structured. Um, but what you're
Maybe
seeing,
you and I should buy a membership on that exchange. Is it open outcry or are they doing it electronically?
I would imagine everything's electronically at this point.
Okay, I thought we could go yell and scream at everybody. All
Yeah,
right, not
I
as much
think
fun.
Yeah, I think the only open outcry in this country is basically the protests you see in front of the White House.
Yeah,
But
that's just one place.
yeah,
All
yeah.
right.
But I think what you're seeing also is demand starting to spark in Europe. Watching a couple of these silver ETFs, or ETCs, as they call, electronic traded commodity funds. Um, Two of them, or one of them, especially Wisdom Tree physical silver fund, saw in one day about a 50% increase in the size of their assets. So this was, I think, March 11th or March 12th. Um, that actually it went from about 50 million ounces to about 75 million ounces in one day. That's to give people an idea of the size of that ad. That's half the silver, represents half the silver that's in the COMEX registered category that backs all the futures contracts. Just a massive amount of silver that that went into that. And then you had another fund based out of Ireland, a silver fund, iShares fund, that also added quite a bit of silver, not nearly as much, but you're seeing that potentially in Europe that gravitation to hard assets, realizing that everybody is basically printing and spending and melting up in this election year, and the
Okay.
concern is probably for the currency.
Yeah. That is really quite interesting that because I heard that besides what you're talking about in Europe, um, that I had an oil analyst, Anas Al-Haji, who said that oil imports have picked up dramatically in Europe. So, I mean, everyone's talking about recessions in Europe, and they're sure buying a lot of stuff. So, that's interesting. It's coming from there, and they're probably more worried about Russia than we are, even though it shouldn't be that way. But uh, Putin wins in Ukraine, the march will continue. So I'm showing your website here, Bob. Very nice, very nicely done. And I'll tell you something right now. I'm not going to get into a knife fight with you. All right. I'm not going
it,
to bring a knife. What kind of is that? What? It's
that's
not.
a 300 blackout. That basically it's
You
we
guys
have
in
it's
Idaho, you have your own army, don't you?
yeah, you could say that, I guess. It's we're very well equipped in the state, so but we're also an FFL, so we actually now can sell a lot of the gear that you see in that picture. For example, ballistic helmet, night vision, thermal. It's just something that we try to stay as safe as possible. Hopefully, we'll never have to use any of this stuff. But it's again, you're just the bad guys, they can bring whatever they want to the table, and sometimes you just have to be prepared. It's not that it's something that it's a touchy subject for a lot of people, but when
Yeah,
you manage a vault and you store 700 million in assets, you make yourself
yeah,
a target.
yeah. Are you expecting civil unrest going into this political season that we have
Well,
have going on?
it's interesting. I mean, it's the old adage, no one ever really riots or protests on a full stomach, especially when your 401k is at all-time highs. So,
Yeah,
yeah, it's this,
that's a good point.
this spending that's been happening, not just in the U.S. but also around the world. This the deficits. I mean, was it deficit creation or $1 trillion in 100 days type of scenario? I mean, you just have so much massive uh, uh, or glut of spending. It's almost like as if this is what you see at the end of the Roman times type of thing. Just throw all care. Was it throw all care to the wind or something like
Yeah,
that?
yeah,
It's a very difficult time for I think a lot of Main Street middle class or public that tries to understand what's actually happening here because asset prices are just floating higher and it's not as if the economy is just booming on all cylinders in every industry. I mean, you see it in the precious metals industry, you see it in the car industry, where you have a glut of inventory building, and people not engaging, but yet you have the digital assets that are just taking off. And you have the technology boom, the melt up that's continually going on there. Shorts being squeezed. I mean, I mean, you've had some excellent calls like Apple and so forth, but I mean, I'm sure it's been frustrating for any
fair.
value manager. Yeah,
Yeah,
definitely.
yeah. Well, I've been talking about this, the COVID low of 12, and this looks like about, what is it, 30? Yes, 30. So you have $18, and the breakout, even horizontally, is closing over 26. That's
Hmm.
going to give you 44 for a target on a breakout over 26, and we're not that far away. And you also know, Bob, that there were times I was always looking for one more low in silver. I'm not
Hmm.
anymore. I think that what happened from here is important, and I'm looking for a higher low, maybe around 23.50,
Yeah, yeah,
23.20.
yeah, you definitely called it. I mean, it was some incredible calls, especially last year. I mean, this is the problem with physical ownership versus the trading side is I think a lot of retail people kind of get focused on price from a long-term perspective, and they think they end up missing out because the price does get choppy and volatile, and it tends to scare people from entering the market. And this is one of the things that it's very difficult from a long-term investor buying a physical coin or bar to um, kind of step aside from the price action and trying to get that ultimate low like a trader or a tactician does, because I think what you're going to basically see, is silver, and you see these correlations with cocoa, you see the correlations with cattle, you see the correlations with other hard assets where silver tends, and I think it's not just because silver and cocoa go together. It's just that it's this idea of inflation and this theme that the money printing, debt creation, whatever part of the time frame, whether it's the 70s, whatever it may be, you see these effects when they start to hit industries that start to have any type of supply constraints. I mean, silver is a perfect example of a lot of primary silver producers not making any money at $23 silver. I mean, it just didn't make any sense. And a lot of these primary silver producers now are primary gold producers. 60-70% of the revenues are coming from gold mining, not from silver mining. So that's building a production shortfall.
Deficit. Yeah.
Yeah, yes, yeah, and I think that's the key, that from a fundamental standpoint, long-term physical owners need to really focus on instead of the day-to-day price action. It just it
Yeah.
it,
Well, they're
it
being driven crazy by things like Nvidia. Why if I only had that 20K in Nvidia instead of silver? You're right, you
exactly.
hit it. Or Bitcoin. Or why didn't I buy Bitcoin instead of silver? And in fact, I interviewed a mining analyst. She's pretty good. Fabi's pretty good, and she told me that silver is the most hated precious metal out there. She does a lot of stuff in uranium and those kind of mines. And what you're telling me about retail, I find extremely bullish.
Oh God, yes.
Extremely bullish. They'll come in. After they're doing their selling, they'll want they will probably won't even they'll miss the whole thing. It's sad, because then if it goes to like 30, they're not going to go back in, and because of their recency bias of their experience. Do you have a view on on the gold silver ratio? Which yeah, go ahead.
Yeah. I mean, to give people an idea, I run a hedge fund in physical metals, and I basically sold recently. I sold gold, and bought more silver in the fund. So basically, I think it was at 89.7 on the ratio. Um,
Okay.
but I'm very heavily weighted towards silver in the fund, 72%, I think now at this point, silver, 28% gold. And it's yeah, that's 99 point, so I think 4% of the assets, that's
Okay.
tied up
So
in
you're doing it
physical.
on the yeah. So you're going, and if it keeps going, say it challenges these highs, would you keep that strategy? Add to the strategy if that keeps happening?
Possibly, yeah. I mean, the idea, again, running a physical fund is it's time in the market. You're not trying to get the perfect move is very difficult, especially when trading the physical. What you're trying to say is, listen, gold's breaking out. It's showing us something's changing in the environment. Silver is, the silver producers aren't making much money. You're seeing the setup in the retail. You're seeing, well, just about 3 weeks ago, the CTAs, the commodity trading advisors, were net short. Now they switched and are heavily net long, but I think they got washed out a little bit on this pullback. That volatility you're seeing on the price action with the CTAs, commodity trading advisors, going in and out of the futures markets, that's just noise. the real issue is when silver finally starts to catch fire, it moves like a hockey stick, and you're not. I think you're absolutely right. You could see 28 to 30 very quickly once it breaks 26, and it's going to leave a lot of people sort of on the sidelines, and then I think the retail is going to be selling into it further. I don't think they're going to be believing in this market, and that's where I've been saying for the last 6 months, the industry is not designed and set up for this potentially heavy selling that could come back in the market. Because remember in 2009, 10, 11, 12, 13, when you had after the financial crisis, you had a lot more silver eagles made back then than you did in 2020, 21, 22. So there's a lot of overhead supply that can come into the market, and it's not that that's going to hurt the spot price. But it's going to hurt the industry because and you're seeing the demand for brand new product. It's especially private refiners making 1 ounce rounds. You're seeing their business fall off a cliff, and this is part of
Well,
the
the silver miners would beg to differ with your opinion of producers not making money. Look at these moves. And these are kind of small. These are, decent size companies, but 260 to 360. What's
yes,
that?
yeah,
40% move. Here's another one, Endeavor, 140 to 220. That's even bigger. So, some of the larger ones haven't had that type of move, but even, AG, which went to the COVID low at 420, it's not bad,
yeah, yeah,
25, 30%.
yeah, picking off the low. But what has it done just since the beginning of the
Oh,
year?
yeah.
I
Okay.
think it's still down on the year, I believe.
Well, I told people that the low wasn't coming in miners last year until this year.
Mhm.
And this definitely, um, was a turn day right here. So
Yeah, 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 and you
got to
called
buy
it. I mean,
pullbacks there.
yeah, yeah,
Yeah.
you definitely nailed it, especially with that falling wedge and so forth. Yeah, it's not that I'm negative again on the industry per se. It's just that I think a lot of people, a lot of retail people believed in these promoters and a lot of these gold dealers that basically
Yeah.
told stories of shortages and silver going to 300 by in 6 months and gold going to
Oh,
10,000, and and I think that's what's frustrated a lot of people is they ended up paying a fortune for premiums, and
yeah.
it
So
just
they,
hasn't
they
gone.
they really deserve what they're getting for the way they raped the public with spreads.
Yes,
They should
yes,
all go bankrupt as far as I'm concerned. I hope they do. Because when you're paying 10, 20% in and 10 and 20% out, you're not giving people a chance to make money.
no,
So they
you're robbing their purchasing power is what you're doing. And I've been very outspoken for 3 years, and it's been difficult because I haven't been invited on to a lot of these gold podcasts and so forth because I'm willing to try to speak out, help the public realize, listen, you have to shop around. Don't trust the one dealer that says they're the lowest price in the country, so to speak. You got to do your homework. You got to understand the structured products that you're investing in. Understand the ETFs. If they're for a trade, that's one thing. But if you're buying it as a store of value, understand what that represents. Because there's a lot of businesses that come into an industry, whether it's the metals, whether it's digital assets, they'll create a business to benefit themselves and profiteer off of a move, so to speak. And the metals industry is no different. So as an investor, especially doing this for 30 years, you really have to do your due diligence.
I recommend that they look into cannabis and chill.
Is that
That's a
the next?
cannabis. That's a cannabis. No, just they should look into it and experiment with it and chill out. So anyway, anyway, Bob, it's great to have you here. Bob's also a very good technician. You got to follow him at Profits Plus ID. And if you're interested in being a physical buyer, Bob's spreads to me were reasonable. I didn't try and grind them. So, go to his website and check it out because I think all the hype the past couple years may not end up being hype. Maybe not as extensively hype as it would be, but you know, uh, $50 silver, it's been there before. So it's not, a big, you know, controversial, aggressive call. So, want to thank you for being here, Bob, and hope you have a great 2024.
Definitely,
Appreciate you.
definitely. You too, Dale. I appreciate it.
Okay, so here it is. Go to the, and you know what, Bob has programs. If you're nervous about uh, having it in a coffee can, um, he does have vaults. And, I'm sure what's your protocol that this gold can never be confiscated by the government or anyone else?
Yeah, we're not tied to the financial system. So it's not that. If you look at the Bank Holiday Act of 1933, that was basically, people that, back then they stored most of their stuff like in safe deposit boxes, and
Yeah,
yeah, and it wasn't really a confiscation because they turned in their $20 gold piece, they got a $20 note. It's just that was the only way that the government could actually reinflate, was to, call in the gold and then revalue it higher. I think the same thing. I don't see the same thing happening because we're not on a gold standard. We don't walk
yeah,
around with gold coins in our pocket. But I think you could see, with all the central bank buying that's been going on, especially the last few years, that's been driving the gold market. I think what's happening is, and I was going to kind of talk about it today or put it out on Twitter, was what they call a gold revaluation account that basically allows central banks to buy gold, hold it at book value, so to speak, or at cost, and then they can actually use those unrealized gains to offset, any decline in their other side of their portfolio. So it's a sort of a balancing effect that they can do. And that could be one of the reasons that central banks have been big buyers of gold, is that they're actually supporting the price, which is
yeah,
supporting their balance sheets. And I think that's, especially with the real estate market, and, especially like
China,
Swiss
yeah,
National Bank, that, basically becoming a hedge fund. You know, we're dependent on higher asset prices. We're sort of in this, basically around the world, we're in this inflate or die scenario. And that's, I think, the underlying theme. I think that's frustrating a lot of the bears out there, is that, this is, I don't want to say national security, but this is basically to avoid, a real get collapse. We're just, it's obviously unsustainable. The only way they can do it is continue to spend more money.
Do you worry about South Africa dumping a lot of gold because they're having problems there?
Well,
You ever
yeah,
think
yeah, I
of
mean,
that?
on the platinum side, it's even worse. I read a story, I think it was this past weekend, where platinum producers are looking to cut production even more. And if the odd thing is, and I don't know what your thoughts are, but, the electric vehicles, I've read a lot where, we just don't have the materials and metals to support the electric vehicle market, to go as
Yeah,
grand as what our plans were. The question is, if combustion engines, aren't done for the decade, so to speak, and, have a resurgence. The issue is that could actually be a surprise for the platinum and palladium market, because you have to look at palladium right now. The managed money crowd is I think it was a couple weeks ago, I was looking at this. They were the largest short in the history of the commemorative traders reports. They've never been more short, than they were about 2 weeks ago, 2 or 3 weeks ago. So there's a lot of firepower that can come from a
yeah,
short squeeze, and obviously you're seeing it with, the cocoa market and so forth as well.
yeah. Had to give up my Bosco. Uh, and anyway, Bob, great talking to you today. I love the prospects of what's going to happen here. Do you know James Henry Anderson?
Yeah, yeah.
James, because I asked him about the gold silver ratio, and he thinks that before it's over, it's going to trade under 30.
I could. That's what I see happening, because when you stretch it, it's like a rubber band. If you stretch that thing, it went to 125 to 1 back in during the COVID or March or the 2020 timeframe. When you stretch it that far on one side and it snaps back eventually, it overreacts to the other side of the equation, and I could see that going down to below 30 into the 20s. It's one of the reasons why I'm very heavily weighted towards silver in the fund from a relative valuation standpoint. Just if you look at the returns from gold and the S&P 500 from 1971 to today, I mean, silver would have to get, I think, to about 67 or 68 just to match the performance of what gold has done since 1971. So that, and then obviously that's reflective in that high gold silver ratio.
Okay, Bob Coleman, your gold and silver man. It almost rhymes. Bob Coleman, gold and silver man. Get a hold of him, do a little stacking. I don't think you're going to get hurt. Just be patient. And
Sure.
Thanks again, Bob. Appreciate you being here, and we'll talk again, or we'll probably communicate on X before that, but be talking to you in June. We'll see how things have changed by then. Okay,
Sounds
bro?
good. Thank you,
All right,
Dale.
everyone. All right, everyone. You could join the team in 16 minutes on the morning edge. You're welcome, everyone. I'm fading. I certainly am fading. But don't fade me. My voice might be fading, but don't fade me at your own peril. Take it easy, guys. Don't just count your pips, count your blessings. Sell rallies in cable. It's going to under 24. I'll see you guys tomorrow. Adios.
Hey traders, this is Blake Morrow with Forex Analytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.